Let's get to 1,000 subscribers. Please help support Joni and our team by subscribing and turning on notifications.
Hey everyone! Have you noticed how everything seems to be getting more expensive these days? Whether it's our food, our transportation, or even our favorite cup of coffee. That's why today's topic is so important. We're going to talk about interest rates, which have a direct impact on the money in all of our pockets. But before we get to that, let's start with a big topic that every investor needs to know. JOYUP Invest Podcast, invest better every day. Hello, dear listeners, and welcome to Wall Street Wake Up, the show that wraps up and updates you on what's been happening in the U.S. stock market and markets around the world over the past 24 hours. Let's dive right into our first story from Bank of America, or BofA. They've just issued a warning to the Fed, the U.S. central bank that manages the country's monetary policy, saying, don't be so quick to cut interest rates next month. Even though Fed Chair Jerome Powell gave a more relaxed signal last Friday, BofA believes that if the labor market numbers remain strong, cutting rates too soon could turn into a policy mistake. So why is that? Well, while some inflation numbers have come down, other categories, like food and services, are still holding steady or even going up. BofA says that if the labor market is still healthy, it means the economy is still growing. And if the Fed cuts rates while inflation is still high, it could just make things worse. From our perspective as investors, this teaches us a valuable lesson. The stock market is never certain. Don't just follow the crowd. We need to look at all sides and analyze things deeply, because what looks like a good thing on the surface might not be the best choice in the long run. All right, since our first topic was about not cutting rates, let's ask a fun hypothetical question. If the Fed really does cut interest rates, who will be cheering the loudest? According to a report from the analysis firm Piper Sandler, the biggest winners will be small-cap companies. Why small companies? Because they often have higher borrowing costs than large corporations and carry a decent amount of debt relative to their size. So when interest rates fall, their business costs decrease, which boosts their profits and makes their stocks look immediately more attractive. The report also noted that companies of all sizes with high debt burdens will also benefit. It even mentioned tech companies like ServiceNow, DocuSign, and even big names like Netflix on that list. On the flip side, however, energy stocks and insurance companies might have to brace for impact. These groups tend to perform better when interest rates are high, so if rates go down, their stocks might tend to weaken. Examples include ExxonMobil, Chevron, and Aflac. From our perspective as investors, this is crucial information we have to use. A rate cut isn't a good thing for everyone. This is our golden opportunity to use this data to plan our investments better. Check if the stocks you're interested in are in the group that will benefit or be impacted, and then make your decision. Now we've come to the most important topic of the week, AI. Everyone in the market is watching the AI giant NVIDIA, which is set to announce its earnings this Wednesday. Why are we paying so much attention to NVIDIA? Because it's hailed as the company that leads AI demand. Simply put, if NVIDIA has a good earnings report, it signals that the demand for AI chips is still skyrocketing. However, there's a recent point of concern. Sales in China might be decreasing due to U.S. control policies. This has the market wondering if NVIDIA can still turn the same level of profit. From our perspective, as investors, investing in AI isn't just about NVIDIA. Analysts from Truist Securities just raised their price target for Microsoft because they see growth opportunities from its cloud business, Azure, and other AI projects like Copilot. There are also several other interesting companies growing alongside the AI trend. For example, Snowflake. Bank of America upgraded them to a buy rating because they see the company's data warehousing business doing very well, with customers increasingly using the platform for AI-related work. Palo Alto Networks, This stock also jumped after reporting strong earnings, as cybersecurity is a crucial part of the digital and AI world. But there's also a warning from KeyBank that NVIDIA might give a next quarter revenue forecast that's lower than what the market expects because of the uncertainty around sales in China. This could cause the stock price to be volatile.
Even though AI is a star in the stock market, in terms of the real economy, BCA Research, a leading independent research firm, says that the impact of AI isn't as big as many people believe. Analysts point out that even though AI companies have massive valuations, most of the investment is still in importing equipment, which doesn't directly help increase the gross domestic product much. More importantly, an MIT study found that 95% of organizations that invested in generative AI haven't seen a worthwhile return yet. Additionally, there's the issue of a shocking increase in energy costs. Data centers that support AI use a huge amount of electricity and could cause electricity prices to rise in the future. From our perspective as investors, this isn't to say that AI is bad, it's a reality check that we have to look at the whole picture. Investing in AI is like investing in the early days of the internet or personal computers. It took many years before we saw the true, clear impact. So don't be impatient. It's better to focus on investing in companies with strong fundamentals and a long-term vision.
So, to sum it all up, what we're seeing right now is a market that's expecting the Fed to cut interest rates. But Bank of America just hit the brakes on that idea. If rates do get cut, small cap companies will benefit the most, while AI continues to drive the market. But with both opportunities and risks, we need to study carefully. Always remember, no matter what happens in the market, knowledge and planning are the most important things. Investing in knowledge will allow us to see opportunities and grow with the market sustainably. And I want to give a big thank you to investing.com for all the great information today. Now, let's take a look at the stock prices related to today's news. In this segment, I'll be doing a live, daily analysis of stock prices for all of you listeners in our JOYUP Forecast. Let's start with our first stock, NVIDIA, NVDA. You can see right away that its chart has incredibly strong, continuous upward momentum. That's because the buying power is still much, much greater than the selling power. A clear trend like this isn't going to end easily. If we look at the long-term chart, we can see it's constantly forming new bases and making new highs. This is a clear signal that the trend will continue. As long as the price doesn't break out of the main uptrend, the outlook will remain positive. And the key support level is the uptrend line you see right here.
But from another perspective, let's look at energy stocks like ExxonMobil, XOM, and Chevron, CVX. We can see that their charts form a clear triangle shape. This tells us that the momentum is in a sideways or directionless period. The price getting squeezed into a narrower and narrower range indicates that investors are waiting for something new. If it breaks out of the triangle to the upside, the momentum will turn into a strong uptrend immediately. But if it breaks to the downside, the momentum will turn bearish just as quickly. For stocks in this kind of range, the support and resistance levels are at the triangle's boundaries.
Another interesting example is a stock that's changing direction, Netflix, NFLX. After a long period of decline, its momentum has now shifted to a continuous uptrend. The fact that the price is gradually climbing reflects that long-term investor confidence is returning, which is a good sign. And the key support level is the uptrend line we've drawn. As long as the price stays above this line, the momentum will remain positive. Now, let's look at ServiceNow and DocuSign. You have to be a little careful with these two. They're also moving in a triangle pattern similar to the energy stocks, but the difference is that their direction seems to be more bearish. Could this mean that the bearish momentum is about to change direction? The key support is the bottom of the triangle. If the price can't hold above this support level, the chances of it continuing to fall are very high. But if it reverses and breaks out of the triangle to the upside, that's a key signal of a momentum shift. As for AFLAC, AFL, its chart is currently in a consolidation or sideways phase. This is when the price moves in a narrow range after a big upward climb. This kind of consolidation is a normal part of the market. It's a period where investors are building up strength to decide which way to go next. Looking at the long-term chart, the trend is still a strong uptrend, so we can look for entry points at the key support level of this consolidation range. But nothing in the stock market is 100% certain. No matter how good the momentum is, we always need to have a backup plan. That means setting a point where we're willing to accept risk if things don't go as we thought, which we call the key support level. If it breaks below this level significantly, it could be a sign that the momentum has shifted from bullish to bearish. And on the flip side, we also need to set a key resistance level. If the stock breaks through this resistance, the momentum will become even stronger. Most importantly, momentum analysis should always go hand in hand with a company's fundamentals. As long as a company is still making good profits and has an interesting business direction, its long-term price momentum will remain strong and trustworthy. All of this is just my personal view. It's not investment advice. Please use your own judgment and do thorough research before making a decision, because all investments have risks. Before we say goodbye today, if you're a stock trader and you have questions but don't know who to ask, feel free to leave a comment and we can chat. See you next time. Bye-bye.